Hi all, my name is Malika and today we are having Ray Quintana. Ray is an experienced investor and a blockchain expert. Thank you so much for coming today.
A real pleasure. I look forward to the discussion.
How did you first become interested in crypto and when?
I was a general partner for one of the top venture capital funds of the last decade. And so it was kind of my responsibility to be on the pulse of new innovation. And I'm afraid to say I was probably 4 years late to the party. In 2016, I would have liked to have been sooner. But once I understood the potential and how disruptive and the type of positive impact the technology and industry could make, then I was hooked.
Thank you. And imagine you're explaining blockchain technology to someone completely new to the concept. How would you describe it using everyday examples or analogies?
So I think the easiest analogy would be the internet. So if you think of the internet as a way to store, manage, and transfer data, blockchain is a way to store, manage, transfer, own value. And it's the extra dimensions of ownership and value that really give you an idea of the potential, along with the kind of footprint that the internet has. So when you think of all the impact and the things that the internet did, whereas at the beginning of the internet, everybody was confused, what is this technology going to do? But now we have the understanding of the impact of the internet and what it can do. And when you layer on top of that, the ownership and the value management, then it opens a whole new disruptive paradigm of computing that is going to change the world in the same way that the internet did.
Totally, thank you. We often hear about blockchain's potential to revolutionize industries. Can you share a real-world scenario where blockchain could bring significant positive change and explain how it would impact people's lives?
So as an investor, I like to talk in terms of actual operational execution, things that are being done. And one example that I think kind of illustrates the impact is in the oil and gas industry. So I invested in a sealant company, and this is a company that could seal nanofissures in concrete. It isn't a company you would think is a Web3 company, but we leveraged Web3 capability to make them into a prime contractor. They went to the oil and gas companies and sealed their abandoned and orphaned wells. And then we were able to, with the Web3 technology, quantify, certify, and tokenize the methane reduction that was created from those wells. And methane has 86 times the impact in the environment that CO2 does. And so two ways that hugely could impact the world is one, the half-life of methane is 10 years. So in a decade, we could see real improvement from the impact that it makes in climate change. The second is that you got everybody pulling the same direction. The oil and gas companies, the green lobbies, the operators, everybody in the value chain. And that's incredibly powerful, getting everybody's interest aligned, no matter where they fit in the spectrum, all pulling in the same direction to create a positive impact. And that's what blockchain enables. We can turn chemistry companies into Web3 companies and make tokenize and impact assets that better the whole world's environment.
Exactly. Yeah, blockchain is not only about cryptocurrencies. Totally.
Oh, absolutely not. Yeah.
Yeah. And what excites you most about blockchain technology, Web3 technology?
So again, going back to the ownership and the value, one of the things that really excites me, so I look at the world from the top down, and being able to manage, large entities or large projects that really impact globally, but also from the bottom up to be able to manage individuals where they have self-sovereign identity, ownership of their data, ownership and access to education, digital healthcare, and financial inclusion, and the creation of those markets and the impact that can make is at the same scale or maybe larger than from the top down. And being able to again provide that value capture of all the value creation that is being done by individuals is very exciting to me.
Yeah, thank you. And what are some potential barriers or challenges that could slow down the mass adoption of blockchain technology?
So I have the advantage as an investor of knowing kind of what's coming down the pipe. So if I look at where the world stands now, we have issues with regulatory compliance. We have issues with green technology. And those are actually the two main barriers that a lot of the institutional asset investors are concerned about. But then we had fraud, theft, and loss. We have privacy issues. We have cost and throughput. And so managing the technology in a way that again allows for the execution of what the vision is. The vision, everybody, a lot of the people at the beginning thought of all the things that we could enable with the technology, but the actual technology wasn't there yet. So the next generation technologies are going to solve those problems and really allow us to create new paradigms, new business models, and engage blockchain in a way that, again, really disrupts the way we compute in the world today.
Thank you. And Ray, what are some common misconceptions or misunderstandings about blockchain technology that you frequently hear about? And what do you think about it?
Well, actually, you mentioned one of the big ones. Blockchain is synonymous with crypto and cryptocurrency, and getting people to understand that cryptocurrency is amazing. The blockchain allows you to solve the double spend problem and create these tokenized assets and value, but that's just one piece of what the blockchain can do. And some of the negative impacts of the cryptocurrency space, which isn't a fault of the technology, but people who have created fraud and things along those lines, kind of had tainted blockchain as well, because they kind of lump those together. So when they hear blockchain, they think cryptocurrency, they think the problems that have been happening in the marketplace. And so you have to kind of pull them back to first principles, explain what I was saying about the value capture and creation and what it really means on a global scale and how it can impact industries and individuals. And it's fun to see the light go on, and then when they do understand it, and then they have it as a tool in their thinking to create new models or start asking questions about, can we do this, can we do that, and then it gets very exciting.
Thank you. And what are some potential solutions or strategies for achieving scalability in blockchain networks, allowing them to handle a larger number of transactions?
Yeah, so again, citing my, not so much that I have expertise or capabilities, other than I've actually had vision into the window and the things that people have innovated and created. So if you think about supercomputing, in the old days, you wanted a supercomputer, you had to buy a Cray. It was a big computer, took a lot of space, cost a lot of money, a lot of energy. That was how you manage supercomputing. Now, if you want a supercomputer, you just put a number of Intel chips in parallel. In the parallelizing of the processing, it's a fraction of the footprint, fraction of the cost, fraction of the energy. So the next generation blockchains are going to be architected around the fractionalization or the parallelization of the processing, and in terms of their throughput capacity, and again, how they're architected. There's going to be flexibility in that architecture. So all of that means that you're going to have much higher throughput, scalability, lower cost, lower energy, and solve a lot of the real kind of bottlenecks or stumbling points for the technology today.
Thank you. And Ray, what are the most promising areas within Web3 that you believe deserve VC's attention?
So again, so that's a great question, because if you think of the internet, the scope and potential for blockchain is huge, all through the value chains across many industries. So, but if you look at the marketplace, the largest market in the world right now is the ESG market. There's $54 trillion earmarked in that space. And with the ability, as I mentioned earlier, to create new business models and capture the value in a way that aligns interests both from the industries and from governments and people focused in environmental or social, allowing the alignment of all of that to happen, leveraging the Web3 technology and the ability to capture the assets which might seem intangible in some cases, is extremely powerful, and it's a huge market. And I'm excited to look at the different business models and things that people will come up with that can leveraging the blockchain technology.
Totally. Thank you. And how does VC funding differ from other forms of fundraising in the Web3 space?
So again, that's a good question. So anytime you're getting capital, it's a transaction. You're giving something up in return. So the question is, what's important to you and how that aligns with your interests and values. So from a VC perspective, the majority of VCs are looking for equity. So they want equity, they want to be on the board, they want to have some governance and guidance and kind of visibility into the company as it's managed and grown forward. Token issuing in that case, and there's a number of VCs that also invest in utility and coins and opportunities there. In that case, you're again tying the value to these coins and the marketplace, and the cyclical nature of the marketplace. You're generally not giving up equity. It's a give and take. And there's also hybrids, of in between. But again, if you distill it down to the core, the main difference again is the VCs tend to want more control and ownership.
Thank you. Yeah, Ray, and could you please name top 3 criteria for a Web3 project for you to invest in?
Yeah, actually. So the first thing I look at is it relevant, impactful on a large scale? There's lots of great apps or solutions that are clever and innovative, but they're not, there might be just a few customers or people that might be interested, and the impact and positive or value proposition that comes from it is not large. I want something that's impactful on a large scale. Second, I'm generally looking for something that's hard to imitate and duplicate. So I want something that people have created that allows a barrier between them and maybe somebody else who has a lot of money and can look over and say, "Hey, that's a great idea. I'm going to just throw a lot of money at it and run with it." So I'm looking for that innovation moat or capability that helps secure that innovation within the project. And the third thing would be a lot of innovation that generally aligns with my first 2 points they generally can be leveraged across different industries or different places in the value chain. So I'm looking for innovation that might not necessarily just have one solution or one product or service, but has a core capability that can be leveraged in different ways in different markets. So for me, as an investor, those are probably the first three things I look at.
Thank you. Thank you so much. And could you please give us some examples of past Web3 investments that were particularly challenging and how they were handled?
That's funny because there's a lot of truth to the fact that Web3 investments can be challenging. And so one of my first Web3 investments was in a company that enabled the certification and tokenization of impact assets so that they could work with the top registries in the world. And the fact that the company's underlying technical innovation was actually Web3 technology. Again, when you're working with countries and sovereign states and enterprises, and they hear blockchain, they immediately kind of shut down. So, and also just getting a bank account for the company when you couldn't really explain to the bank what it is they did, and you couldn't say blockchain as well. So one of the things we did actually was we abstracted out the blockchain and the Web3 and focused on the outputs, the capability, the utility, what was being generated. And everybody was amazed from that perspective when, that we could do all of these things. Once we kind of channeled things in that direction, we got the bank account, got a number of projects, went from investment starting at zero to listing on a public exchange in 14 months. So it was incredible when they focused just on the impact and the capabilities, and we kind of took the Web3 piece out of the equation for them.
That's funny. Yeah, thank you for sharing this story.
Yeah, it was very funny. I mean, the company would be listing on the NASDAQ and don't tell them it's blockchain though, okay?
Yeah. And how do you handle situations where the founders or co-founders of the project disagree with the direction VCs want to take? So
with me specifically, I tend to invest early and as well as the follow-on rounds as well. So for me, working with the companies is a many-year project. So from the very beginning, it's important for me to make sure that our visions align. And a lot of times with our fluency and capability in the Web3 space and our network, we can actually help the founders kind of expand their vision. Because normally the problem I have with a lot of startups is that their vision is too small. They kind of think in the context of their experience and their normal work environment. So again, kind of expanding their vision and making sure that they are have full buy-in and that's what they want to execute on is a key part to the investment process. And if we're both on the same page and think that we both bring a lot of value to the table and want to work together, then that's when we make that investment. Otherwise, I walk away.
Understand. Yeah. And what do you think? What are some common mistakes that founders of projects do?
Common mistakes. So I think one of the common mistakes is their perspective on investing. I always tell the founders that you are on the buy side. You are out buying capital. So, and also you're the expert. You know your technology better than anybody else. So when you walk into the room, make sure that you do it as a point where, again, you're the buyer, you're asking them to sell you on what they bring to the table. And it should be a lot more than just money. And also, again, the understanding that when it comes to the innovation, they're the smartest people in the room. That doesn't mean that, that they can maybe have the same grasp on translating that innovation into an enterprise or business. And that's value that a good VC can help bring to the table with them, in managing that strategic framework. But I think them, again, understanding their part in this, and that they're the leaders of this company and owners of this innovation is something that's very important.
Thank you.
Mm-hmm.
Yeah, Ray, what resources or tools do you rely on to stay informed about the market, news and everything?
Ooh, okay. So there's a couple of things. So of course you have the news feeds, but my partners and associates, I always tell them that the most important thing is boots on the ground. You have to go grind, you have to go to the events, you have to listen to people, and you're not going to be good at anything if you don't grind, and no matter how much talent you have. And so I think that I don't understand investors that make it hard for the founders to speak with them and get to know them and kind of put up those barriers, because I think that's one of the most important parts. So that's one thing that's important to me and everybody that works with me in the investment side. Okay,
so the elevator pitch would work for you?
Well, the elevator pitch, being able to stand in front and listen to them has worked, lots of times. It hasn't worked a lot of times as well, but that's the grind part, right? Listening to all of the elevator pitches or, the one pagers and speaking with people. And sometimes you have to peel the onion away to get to what is that real value proposition, and understanding that and how you can potentially support and help them succeed. And again, you got to turn over a lot of rocks, to find the diamonds in the rough. But that's, if you want to be successful, that's the investor grind.
Sure, thank you. And when do you think will the market go up?
Ooh, yeah. So I spend a lot of time in the markets, all kinds of markets, and I found that you cannot time the market. If I could time the market, I would have as much money as I wanted. I could be printing money. But so the factors that need to be in the marketplace to help drive the momentum, and I think a lot of what has caused turmoil in the marketplace has been, again, not necessarily the technology's issue. And actually the technology can solve a lot of the problems that that has been created in the marketplace with the next generation of technical capabilities. Like I said, the fraud, theft, and loss protection, the regulatory compliance, the privacy, all of those things. And having those next generation companies in the marketplace to kind of provide a North Star or clarion for the technology and where it's going and what it's capable of is a great way to drive momentum in the marketplace and get it to start building up. One of the things I've learned, and I've been through 6 different market bubbles, and one of the great things about the bubbles is every one of them that had innovation or a core technology that created a bubble actually came out the other side. Part of the reason that it created a bubble is because the innovation had so much potential and impact. So I think on the one hand, it's been problematic on the roller coaster ride of up and down and the bubble and all of that. But on the other hand, it just talks to the real potential and impact that the technology can make in the world moving forward. And the next generation of blockchains, people will be looking more at the capabilities, less about the hype, and that is what will build, real market traction and growth.
Thank you. And could you please give us more details about these bubbles and explain it simple way?
So sure. So a bubble is kind of irrational exuberance, and again, I'll mention the internet in the 2000 area, where all these internet companies were getting outrageous valuations, and a lot of it just based on hype and people's kind of FOMO, following projects because they were afraid of missing out on these projects. And then the market crashed completely. All of those wonderkin startups, internet startups, the majority of them disappeared. Maybe not the majority, but all of them took a hit. And a lot of them, the ones that were just sizzle and not substance, disappeared. But out of that came the next generation of internet companies that really changed the world and created incredible value in the marketplace, and drives a lot of the top end GDP for the most successful or largest GDP countries in the world. And so that's kind of the same cycle we're looking at with blockchain now, where we had again a lot of exuberance and noise in the marketplace, and everybody excited about the hype, and then that exuberance, the bubble burst. But again, we're coming through now on the other side with real substance and real projects and real impact. And so as that gains traction, the market will take off. And as you heard me say before, I think it's going to be impactful on a scale that rivals the internet.
Thank you for the explanation.
Of course.
And, my last question is, what advice do you have for someone new in the world of crypto?
Ooh, someone new in the world of crypto. Well, again, anything new, anyone who's new to anything, it starts with educating yourself. I mean, learning as much as possible in terms of how things potentially relate to what's important for you. So what I mean by that is maybe if you're an industry, you know an industry, or you're comfortable in an industry, or maybe you're just looking at the technology just so you understand how it can be leveraged in everyday life, or just where the technology is potentially going. So kind of first following the history, understanding how things evolve and what the potential is, and then kind of learning more specifically in areas that are important to you. And then once you get to that point, you have a certain level of fluency, then you can talk to people who are thought leaders and creating the next innovations in the space. And you're part of the conversation and can be part of the actions as well. But again, education is the first thing, not just following the hype, not just listening to whatever you hear. So I think that's the most important part.
Thank you so much, Ray, for your time. It was such a pleasure talking to you.
No, I assure you, the pleasure was all mine. Thank you so much.
Thank you.